As you know that there are hundreds of strategies to trade in the market. If you go to YouTube, you see so many strategies. If you read some books on trading, you'll see so many strategies. Like for example, in my 25 day trading strategies course, I have almost 25 strategies. In my scalping course, I have around 15 strategies. In my crude oil course, I have around 10 strategies. In gold and silver course, I have almost 10 strategies. So there are so many strategies I also discuss in my various courses. So out of all those strategies, which are my favorite strategies? Because these questions I have been asked by my followers many times, asking me which are my favorite strategies in trading. So that is why today I decided I'll make one detailed video, and in this video not only that I'll discuss my 5 favorite strategies, what is the logic behind this being my favorite strategies, and whether this strategy is more applicable for option buyers, option sellers or scalpers. That all I'll be discussing in this video. So that is the topic of today's video on top 5 picks, that is my 5 personal favorite strategies. And the first strategy which are my favorite is reversal trades on trending day. So this strategy is taking a reversal trade on a strong trending day. It can be uptrend or it can be downtrend, and most of the time you see that reversal happens in the late afternoon. It can be after 2 o'clock, 2:30 or around 3 o'clock. This is one strategy I have seen. When it works, it can work very nicely, especially for option buyers, because you can risk a small amount, and if the trade works, it can work very well. So that means suppose the trending day is going down and entire day market is going in the trend, around 2:30 profit booking comes. Sometimes it can be 3 o'clock and suddenly makes a V reversal. And what is the trigger point I look for? And the trigger point I look for, you know, that trending day, normally market stays below the 20 MA when it's downtrend. When it is uptrend, it is above 20 MA. And when it breaks that 20 MA and closes above or below the 20 MA, that is the trigger point. And from there, profit booking can come and suddenly it can make a V reversal. And that is one of my favorite strategy. Let us go to the chart and let us see some example of this setup. Okay, in this first strategy, the main thing you have to see is that it has to be uptrend or downtrend day, either 20 MA sloping downside or upside. Either of this, that is the first condition. Second condition is it should be 5 minutes time frame. And the third condition, it should happen only late afternoon, not at the mid afternoon. It is only applicable in late afternoon. For example, in this setup, you can see that this is the 22nd January chart of Bank Nifty. You can see that from here, Bank Nifty totally going downside and it is trading below the 20 MA. And when trend is very strong, you see that most of the time candles are staying below the 20 MA. So now you have to look for the candlestick in the late afternoon which closes above the 20 MA. So you can see that this candle has closed above the 20 MA and closed above it. That is your entry. So that means this setup is taking the reversal trade on trending day in the late afternoon when candle closes above the 20 MA. And why it is my favorite strategy? Because this strategy risk is maximum only this much. You can keep the stop loss either below the day's low or below the entry candle and take profit could be very big. Because what is the logic behind this? Logic behind is profit booking. Because on trending day, most of the time profit booking comes in the late afternoon, because you have to square off your position before the market close, right? So people who have shorted here since morning, now they have to square off the position. They have shorted it and they have to square off, mean they have to buy back, right? When they have to buy back, that means when they start buying back, then one candle forms like this and then series of candle comes. Because another thing is that people who taken a short trade, because these people who shorted at the early of the day, they started booking profit. And another reason is people who went short late afternoon thinking that today market will go down, now suddenly they are trapped, right? Suddenly they are trapped. Now they have to square off the position, their stop loss getting hit, and which can lead to big day like this. Okay, this is the November 19th. You can see that price started going aggressively on the upside and 20 MA also in the strong sloping mode, right? Now you have to wait for candle to close below the 20 MA to take a short entry for the reversal entry, but only in the late afternoon. For example, this candle has closed below the 20 MA, but you should ignore it. Why you should ignore it? Because it happened at 12 o'clock. Preferably take after 2 o'clock. then only it's a high probability. You can see that this candle has closed above the 20 at 2 o'clock, and that is the place you can take short entry, because it has to happen in the late afternoon, and most of the time it can keep going down. And this is not only for option seller, even option buyers also can take use of this setup, because strong momentum can come on the downside. And what is the logic? Again the logic is, people who went long here at the morning, now they have to square off the position, because day trading mean you have to square off the position same day. And squaring off mean what? They have to sell it now, right? Morning they were buying, now they have to sell it. So that is what makes price to go down. That is the one reason. And the second reason is, people who started taking a long trade here, thinking that today market will go up like this, and now that trapped. All right, they must have kept stop loss somewhere here, and all the stop loss getting hit, right? They are getting trapped. So this is the reason why this setup works most of the time, because of the profit booking comes in the late afternoon. And second reason is, people who enter long or short at the late afternoon, they are now trapped. And the next strategy which I am going to discuss, which is one of my favorite, but especially this is more useful for scalpers. So this strategy name is Lilliput candle breakout strategy. And this strategy is nothing but, when you are seeing that market is in the trend on 1 minute time frame, and sometimes it gives a pullback, right? Retracement. And when it makes a retracement, it starts making small doji candles, small pin bars on 1 minute time frame. Maybe it can make series of 4-5 candles, or it may be some 8-10 candles. Small Lilliput candles mean it doesn't have the proper body, it is either doji or pin bar. And finally one big green or red candle comes and breaks that high of that small Lilliput candles. From there, most of the time you'll see big momentum on the upside. If it is on the downside, then on downside. That means, that shows that again buying pressure is coming or selling pressure is coming. And this is one of my favorite strategy, especially when it comes to scalping. Okay, this Lilliput breakout candle, one of the high probability setup, especially for scalpers. And main condition is, you have to go for 1 minute time frame. Second thing, you have to see what is the trend on 1 minute time frame, not on 5 minutes. You have to see what is the 1 minute trend. 1 minute trend is showing on the downside, because 20 MA is sloping on the downside. Now you should look for the opportunities where after downtrend it is taking a pause and it is making Lilliput candles. Lilliput mean small candles like doji, pin bar and all this. And when you see it making in the downtrend, it is making small candles. Mark the levels of high and low of that Lilliput candles, and once it is broken with a full body candle, that is your entry. And you can see best opportunities you will get when the candle breaks that range of Lilliput candle. Here also you can see that it is making a small 4 Lilliput candles with a small pin bar doji, and once big candle breaks it, that is your entry to take a short trade. And here also you can see another example. This is the Nifty, date is 11 February. You can see that it was making a strong consolidation here, and once that consolidation broken, that was the entry. Here also you can see that small consolidation, and when it is broken, that is the entry. Here also you can see that small consolidation with pin bar, doji and all these candles, and once it is broken, that is the entry. So the thing is that you have to go with the trend. What is the trend? Trend on the downside, and then wait patiently for the place where it is making consolidation with Lilliput candles, and once it is broken, then you can take a short or long trade as per the setup. And next strategy, which is my favorite, that is the strategy based on initial balance high and initial balance low. Initial balance means first 1 hour of the day. So 9:15 market opens and 1 hour mean 10:15, right? So mark the first 1 hour high and low, and if it is a very wide initial balance, and that day CPR also very wide, that is also important, means CPR has to be wide. So if you see a wide initial balance, then mark the border of both the high and low, and most of the time you can trade at the low of the initial balance, taking a long trade for a reversal, or taking a short trade near the initial balance high for a short trade, and most of the time it can work very well. Even sometimes breakout can happen from the initial balance high. Such times I normally don't take breakout trades, because I know that most of the time reversal can happen, that means fake breakout can happen. But remember, the criteria is initial balance has to be wide and your CPR has to be wide that day. Okay, now next my favorite setup is initial balance high and low. Initial balance, I said that is the first 1 hour of the day. If it becomes very wide, then this setup is applicable. And second thing I said, CPR has to be wide. If CPR is wide, then it becomes high probability. On this day, on 29th November, you can see that CPR also wide and initial balance also very wide. So what is the first 1 hour high and low? You can see that first 1 hour high and low is this, right? So now what you have to do, you have to either short when price comes near the initial balance high, or taking a long when price retraces back to initial balance low. That is the setup. Time frame is 5 minutes, applicable only in Nifty, Bank Nifty, not on stocks, not on commodities. And you can see that once it made a initial balance high and low, next time when price came back initial balance low, that is the long opportunity. Now, many times you may be thinking that it has to reach the initial balance high first, then only we have to take a long trade near the initial balance low. That is true also, but the thing is that sometimes it may not reach exactly back to initial balance high. Even it reaches 60 to 70% of initial balance high, then also you can take it. Okay, then also you can take it. Not necessary that every time it has to reach, then only you come down, then you can take. Here you can see that it almost reached 60 to 70%. Now you can take it, because not only this becomes initial balance low, this also becomes your demand zone, because price made a big bounce from there, right? So that is what this becomes high probability when CPR is wide, because it is likely to be sideways day, and initial balance also wide. And this setup is more applicable for option seller. Okay, so this is also option buyers also can take use of it, but for the option seller this is more ideal, because option sellers, they don't need a big bounce like this to make profit, right? Even market stays sideways, still option sellers can make profit because of the theta decay. So that is why it is more ideal for option seller. And the next strategy, which is my favorite, that is the bald candle entry strategy. This strategy can be very useful, especially for a scalper or even a option buyers. So that means what is this strategy is all about? This strategy is all about when you are looking at the chart, if it is in the trend is on the upside, that means 20 MA is sloping on the upside, then look for a candlestick, green bullish candlestick, if it is the trend is on the upside, which doesn't have any wicks on the downside. It can have a upper wicks, that is fine, but on the downside it should not have any wicks. Bald candle, that means no wicks on the downside. From there, most of the time you'll see momentum coming very strongly. Same applies for a red candle on the downtrend. If you see that candle is making one red candle and it's a bald candle, that means no wicks on the upside, and it has a full body candle, most of the time there can be a big fall from that candle. That is the indication of most of the time strong momentum from that candle. Okay, this setup is bald candle entry setup. This setup, it should be taken either along with the trend, or when trend is downside going for a bearish candle, but sometimes sideways days also it can work. But for that you have to see something like this, something like consolidation, and then bald candle happens. That is the best entry. So for example, you can see that this is the one which I was talking about. This bald candle, you can see that, has this candle have any wicks on the downside? No, that candle doesn't have any wicks on the downside. And another thing is that it has broken many strong resistance, right? There were many resistance here. You can see that that candle has broken all the resistance on the left and closed above it. So if you see this kind of bald candle near some strong support, like near the 20 MA or near CPR, or breaking some resistance, even in sideways days also you can take it, provided it has broken some important level. And that shows that big buyers started aggressively buying here, and that is what you will see. There will not be any wicks on the downside. When you say candlestick doesn't have any wicks on the downside, that means aggressive buying is happening on that candle, and price can have a strong momentum from there. This is the 5th December chart. Here also you can see that it is making a strong consolidation for a very long time, and this candle has broken the 20 MA and broken important resistance here from that consolidation. And look at the candlestick bottom. Is there any wicks? No, right? There's no wicks on the bottom of this candle. This is the one of the best entry for scalpers. Okay, so you can see that this candle also almost 0 weeks, this candle almost 0 weeks. So this is not a entry, this is not entry. You should not take entry anywhere. You should take the entry when it happens after some consolidation. Okay, it should be the first candle after the breakout. Don't take the entry because it's a bald candle at the top. For example, you should not take the entry on this candle even though this is a bald candle, because move started already from here. Okay, so that is what something you have to look for when you are taking a bald candle entry. And here another example, you can see that this is the Bank Nifty. You can clearly see that trend is on the downside. So now what we have to look for? We have to look for a bearish candle with no wicks on the upside, right? So it should be red candle and no wicks on the upside. Downside, if there is a small wicks, fine. It should not be too big wicks. So if I look at this chart, I can see one of the bald candle here. There is a bald candle here. There is a bald candle here, right? So you can see that there are three bald candle, but which is the high probability? High probability bald candle is this. This is also high probability bald candle to take a short entry, but this is not the high probability candle to take a short entry even though it's bald, because there are already three bearish candle before that bald candle, so you should ignore it. Okay, so look for the setup where it is a candle near the resistance or candle breaking some important support. Here this candle has broken the support after that series of doji. And the last one, that is the fifth strategy, which is my favorite. This is applicable only in the crude oil and gold and silver. Not applicable in Nifty Bank Nifty, not applicable in any stocks. This is the Asian session breakout strategy. You know that commodities opens for 23 hours. In Indian market, it is opens only for around 14 hours, but globally it is open for almost 23 hours in a day. So that means it goes through all the session, Asian session, European session, US session, all the session. So whenever you see that Asian session is a very quiet session, that means it is making a strong consolidation, not making any big moves, then look for the breakout from that session. Mark the high and low of that Asian session, and once candle makes a breakout, it can be in European session or US session or in the Asian session itself. If it makes the breakout from that Asian session with a big bullish candle on the upside or bearish candle on the downside, most of the time you can see a unilateral movement on one side. It can work very well only on commodities, not on Nifty Bank Nifty. Some strategies can work very well in commodities, some strategy in Nifty Bank Nifty. For example, initial balance high, initial balance low, that is only applicable in Nifty Bank Nifty, not applicable in crude oil or gold and silver. And this Asian session breakout only applicable in commodities like crude oil, gold and silver. Okay, so that is something you should remember. Now let us see what is this Asian session breakout strategy all about. So here what is the setup is, it should be, the first condition is it has to be 15 minutes time frame, and you have to have that indicators which will tell you that which session currently market is trading. You can go to this one, you have to select, and once you select it, you will get this kind of color codes on your chart. Blue means it's a Asian session, green means it's European session, dark brown means European and US sessions are overlapping, and only pink color means it's a US session. Okay, that is how it works. You have to wait for the Asian session and see how it is trading. It is trading very silently, very quietly, or it is making big movement. Here you can see that on this 30th January, it is trading very silently. And when the breakout happens in the late in the Asian session, or it can happen in European session or in US session, wherever it happens, that is the entry. So if you see this kind of setup, it is trading very quietly, and late in the Asian session or European session, breakout happens with a bullish candle. Most of the time you can expect a unilateral movement on the upside. Okay, most of the time. It can work very well in gold and silver, but it can work also in crude oil. This is also another example. Gold, you can see that gold was trading very quietly in entire Asian session. Even during the European session, it was trading quietly. And when European and US session overlapped, it made a breakout. And after that, you can see how big move came on that day, right? So that is what commodities sometimes break out. If it works, it can work very well. So it can work on gold and silver most of the time, but sometimes it can work on crude oil also. This is the crude oil chart. This is the 12th February. You can see that Asian session, it was trading quietly, and around this level, it made a breakout with a full body candle. And after that, you can see that entire day, it was going down. So that is what this setup about Asian session breakout strategy. And these are my top 5 picks when it comes to strategies. There are many strategies which are my favorite, but I can't discuss due to time constraint. Maybe in future video I'll share some more my favorite strategies, but these 5 strategies, if you do the back testing, you will see that it can work most of the time. That is why these are my favorite strategies. And you have seen that all these strategies are pure price action strategies, and there are not much indicators or option chain, open interest, nothing was discussed. Most of the strategies based on price action. So that is why they say that price action is the king. But also important is keeping stop loss and trading, because no strategy is 100% foolproof. Risk management, position sizing, all are very important in trading. So that's it guys about today's video on my top 5 picks in strategies, and I'll see you soon with a new video. Until then, bye and take care.